Hi, everybody. Everyone doing all right? Give me a response if you could see my charts. I have US dollar yen up here. Welcome to Face in Zoom, where profits loom. And if you're new in the business, this is a place you can bloom. Okay, so plan some good, yeah, okay, Olivier, Dave, Craig, everyone. All right, let's get serious and have a great week. Everyone with me for having a great week? Give me a Y so that we know that you're in it with us. Okay, so we're getting a little bounce in the yen here, which I think is great. I'd like to see more of it because, you know, we keep confirming new lows, almost at my red line magnet that I've had up here for weeks, trying to reverse. So the daily actually is, and there's confluence down here with the line at 61.8. So, you know, I'm going to be looking for things. It's like life, though. You know, here's, I was talking to people, you know, when you're looking at a move terminating and it still has a lot of momentum, and you may have a number like this fib, and it could work even though maybe it's going to confirm the low like it is here. See? A little divergence, but look at this reading, still lots of downside momentum. So if you're going to trade the line and trade a fib, you go into it with the psychology of, you know what, most likely this spot is not going to be the launching pad for a huge, tremendous rally, because like in life and as traders, important things are always tested and retested. So what do you do if you take a signal down there? You lower your expectations, you know, and look for 40, 50 pips and get a reaction off of that. Everyone with me on that? So when moves are terminating and you think that we're due for a correction, lower your expectations on the first bounce, because if we're confirming lows, there's a high probability that there'll be another low. It's just a low, not the low. Okay? So that's happening here. S&Ps have fought their way back, but God, they still look vulnerable. I just have to think, Steve and I talk about this a lot, and maybe it's going to hold. But you know how many stops are here? You know, I was short for this and thought I had the, you know, the retrace high. And then Monday, and this was a reversal week too. So on Monday, it just came in blue. You know, I was like a deer in headlights here. Ended up fighting it all the way and, you know, starting to take stuff. But, you know, the Steve and I and Blake, and, you know, it's my sarcasm. Do you think there's at least one stop under 2720.90 in the S&Ps? I think at least one. So are they going to turn it before they shake people out? You know, I was thinking, you know, any rally that we get here, as long as we're under 2800, it's red, guys. Okay, 2800. If it's back above 2800, okay, you know, the bear case for now is over. But you just do simple arithmetic from, you know, 2960 to big round numbers, 2800, 160 from 2800 gives you a 50% retrace. So I do think that's where we're going, even if we get some type of pop here. Once we take this out, though, maybe there's a chance we could generate another big rally, but I think this is going to be vulnerable. So the only new thing I'm trying here, and I'm early, and Steve and I went over the charts during a review. Also the gold, silver, I pointed out the falling wedge. We're getting a breakout. Silver's been lagging the gold, but it's still a breakout. So I'm thinking at least 480, and if the wedge is real, we should go to 1620 because wedges retrace 100%. And so called that out about 1439 last week. And here's something I'm trying. I'm early. It's counter trend, so I'm going lighter, but I'm looking for maybe one more high up here in euro pound I usually just put a piece on so I pay attention because I get distracted easily. That's something you could do, if you're, and I'm always early. So what you could do is put a real small piece on. Steve does this. Blake scales, put a third on, put a quarter on, and hope you're early so you could build a position. And if you have something on, I don't care how small it is, you'll see that you'll pay attention to it more. Otherwise, you'll get distracted. You'll start looking at other things and turn your head and go, I was going to do that. Anyone experience that? We have a great guest today. Amelia Bordeaux used to be on CNBC all the time. And last time she was here, big dollar bull, big euro bear and cable bear, she's been right. And, she talks about, when you're on a desk and you're working for a bank, you lose your job on moves if, euro collapses or pound goes to new lows and you're not there. So she said, she's always maintaining a core short position for these scenarios. I think she was looking for under par in euro, but, lots happened since I talked to Amelia. So we'll see if this trade war and what's happening shifts her opinion at all. Should be a great interview. She's a pro. She used to be a contributing editor and anchor trader. So stick around for Amelia Bordeaux. I'm grateful to Joe introduced her to Face, and she wanted to come back. So like you guys in Face, you want to come back. How many joined, took advantage of our promo last week? Give me a Y. I have to see at least 5 Ys or I'm going to restart the meeting and go to meeting.
I've actually met Amelia in person, coach. She's a very nice person.
Met her? Oh, okay.
Yeah, in New York, yeah.
Yeah, oh, that's right, the money show. I can't wait to do the next one with you guys. So I think that's about all I have right here regarding the Dixie. And, I'm still bearish. I think that this was a pretty significant break. I think maybe I even Mr. Confirmation might be getting something. We'll hear from Steve in a little while. But if we got another rally back towards this 97.90 level or so, some type of ABC, I'd try it again. So, Blake, what's new? How's your weekend? And I'm thinking
Zoom's new.
Zoom is new.
Zoom is new. I like it. I'm getting used to it. I think everybody's probably feeling the same way. It's like, ooh, it's cool.
I'm scared.
Let me explain to you guys the upside to Zoom. Well, first of all, let me also explain. I've been using GoToWebinar for probably about a decade, up until today, and it is antiquated, old technology. It used a lot of your your resources on your computer, would slow down your computer, not only from a presenter standpoint, but from a user standpoint. So, using it really was very taxing on people's systems. Zoom is obviously
exhausted from
I'm tired already.
I feel it's weight off my shoulders.
It's a much excuse me. Excuse me. It is a much Zoom is a much newer system. It's going to be more compatible with all of your computers at home. It's going to be less taxing on your system, which is important as you're trading the markets. Because most of us have several different applications running at once, whether it's ForexAnalytix on our browsers. Then we have our trade station. I run Bloomberg. I run my trade station. It's so when you're running a lot of different things on your computers, it becomes taxing. And then you throw on top of it GoToWebinar. Excuse me, I gotta find my water. Excuse me 1 second.
No problem, Blake. So yeah,
he's allergic to Zoom.
He's allergic to Zoom, obviously. Yes, yeah. Zoom also makes our life much easier.
Some allergies, obviously. Sorry, guys. But what I was saying is that it's in my opinion, it's a much better system. but it's getting used to it. You know, it's getting. Steve, correct me if I'm wrong. There's not any different features that you have here that you would have on GoToWebinar. You just got to kind of learn where everything's at.
Yeah, we have some extra features, and some things are more efficiently done. There's definitely nothing lacking. I mean, there is no downside to it, if that's what you're asking for.
Yeah. So let me let me do this. I'm gonna share my screen. See if you guys can see my screen.
Yes, absolutely.
Okay. So and this is new for me as a presenter. So I'm gonna try to annotate here. Oh, look at that. And then I can let's see, clear all drawings. Look at that. Like I can draw, and then I can go back to my mouse. Much easier to use from a presenter standpoint. So I can spotlight. Can you guys see the spotlight?
Yes, absolutely.
Isn't that cool? All right. Let's see if I can give you a stamp here. Oh, how about that? Oh, that's kind of nice. Let me draw a squiggly line. Oh, that's kind of nice. And let me clear all that. And then go back to my mouse. And this is, from a presenter standpoint, much easier to do. So like if I'm looking at the euro and I go, look, you got this, this big wedge here. I think we might, build for the next couple of days before, we break out to the upside, and then it will look like, that. Oops. Let me see. I want to do that. Oh yeah. See? Oh, that's pretty. And see, and then I can erase my stuff. Isn't that nice?
You have a preference for pink.
Yeah. Sorry. I like black. All right. So, but this is it really is, easy from a presenter standpoint. Much easier than GoToWebinar. GoToWebinar was, very. You had to go. I had to go like different screens to like erase stuff, go back to my my mouse. So this is much more intuitive for us to help explain what's happening in the markets, and hopefully you guys will get used to using the platform and know how to ask Q&A questions using the Q&A panel, and login's going to be hopefully a little bit easier, and so overall I think it's a better system. And like I said, most important, it's going to be less taxing on your system. It's going to be a little bit easier for you guys when you're using it at home. Now, is Matt or Steve, is there a mobile app for Zoom?
To be honest, Blake, I think there is. I've never tried it, but I know that it works on mobile. I just haven't tried yet if it gives you a separate app, or it just launches and works through the browser.
Okay, Chi says there is a mobile app.
I'm guessing that they do, because it gives you more options. Yeah.
Great. Okay, that's awesome. And so for those of you that are on mobile, you're probably experiencing it right now. For those of you that are, and for those of you that are not, and you're like, well, I didn't know there is a mobile app apparently. So thanks, Chi, for answering that. Because I know a lot of you guys listen on mobile, or even if you have it on your phone next to tablet, next to your computer. It's cool. All right, so let me talk a little bit about what's happening today, so I don't spend all of this on Zoom. This is a shiny new toy for all of us. I hope you guys are enjoying it. For us, it really is. It was an evolution process that we had to make as a company. It's just a better platform. And like I said, I've been using GoToWebinar for about a decade. So when we went over to we started doing our own webinars over the last 2 years ago. I just used what was familiar, and even though it was pricey, GoToWebinar was, I knew it worked well. It was consistent, But look, they haven't even upgraded it for years. They haven't for years and years and years. They haven't done anything new, and so it was about time that a new company came in and disrupted their process a little bit and gave a better product. And that's what Zoom is. It's just
I'm shorting GoToMeeting at the market right here.
Yeah, you can short. That is the name. The actual company is not GoToMeeting. It's shoot. What is?
Once they lose ForexAnalytix and people hear about it,
Yeah,
they're going to hold trading.
They just lost a good chunk of revenues. We paid them like $34.50 a month. I'm joking. We paid a lot more than that. But anyway, but hey, look, it doesn't matter to you guys. It's free to you guys. So let's go ahead and let's talk about what's happening here in the markets. Now, first of all, you can see the euro is firming up towards resistance. We're still in that descending wedge, and we're key resistance is going to come in at 112.40. I mean, that's we talked about that during the week ahead video. That's really going to be most important. It's going to be this red line here, and I can actually make that. Let's make that blue. The goddamn pen is blue. If you guys ever seen Liar Liar,
that's good.
It's by far one of the funniest Jim Carrey movies I've ever seen in my life. Although I was going to have my kids experience Dumb and Dumber this weekend, but we never made it. But anyway, goddamn pen is blue. Sorry, I can't help it. It's such a funny movie. You guys have to see it if you haven't seen it. Liar, Liar. It's a classic. Okay, anyway, you can see we're in this descending wedge. I think eventually we do break out to the upside. As I had mentioned to you guys over the weekend, I think the dollar is vulnerable against certain currencies. And what I mentioned to you guys yesterday on the week ahead video is exactly what's panning out today. You got the euro dollar that's actually weaker now, or the dollar that's weaker against the euro. The cable's still trading really heavy, and that had to do with the PMI numbers that came in extremely weak over the weekend. The PMI numbers are just they came in below 50, so that's contractionary. And so the cable got hit as a result, but as the dollar is seeing some, I want to say overall weakness, but we'll continue to talk about the dollar. The pound is getting a little bit of a bounce here. We might try to develop some sort of inverted head and shoulder pattern here. We really got to get above 127 for me to get bullish on the cable. That's pretty far away from where we're at. I mean, we've still got 75 pips to go just before I start turning bullish on the cable, technically. The Aussie, we're coming right up to previous support. Going to be, we got two previous support levels that need to be taken out, really. You got to move above 69.70 and then a move above 70 cents. Really, it's got to get above 70 cents for us to really get constructive here on the Aussie. But the Aussie looks strong. Now, if you missed the news last night, the White House or Trump administration is not going to induce tariffs on Australia. That came out in Asia last night. I picked up a pretty large position in the Aussie last night when that news came out, and you can see it right here. I think I bought it. I want to say I did buy. Actually, I can tell you with certainty. I bought it at 38, and I bought a pretty big position, and I sold the rest of it at like 48. And just so I could sleep overnight, and it's pushing higher. I should have that. I actually should still be long, in my opinion, but I'm not right at this moment in time. The Kiwi dollar really responded well too. I bought a lot of this right here at 40. I think I sold it at like 50, and here we are at near 70. And the Kiwi looks very constructive now. And the currency I like probably the most with not just the Kiwi dollar, but one of them that I like the most right now, you can see the Kiwi can really stretch up here to 66 cents, which is going to be important. Its previous support will be current resistance up here, is going to be the Euro New Zealand. This is a pattern in play with in ForexAnalytix, but you can see this big head and shoulder pattern coming out of an ascending wedge. That is a bearish you can see this is a very bearish development here. Oops, let me do that again. You can see that very bearish development on the Euro New Zealand. I believe that we are on our way a lot lower in the Euro New Zealand. So it, you know, like I said, it looks pretty bearish here. Let me clear that. Back to the mouse. All right, so easy to do. And if you remember, I said, you know, you got to be very selective about where you short the dollar. Look at the dollar MEX. The dollar Mexican peso is racing up towards those highs again. As you know, the news that the White House is inducing tariffs on Mexico for non-economic reasons. We're seeing the U.S. dollar Mexican peso race higher. All right, so the dollar Canadian is surprisingly trading heavy. You know, I'm actually quite surprised that the dollar Canadian hasn't responded with some upside here. So, and I'll have to be perfectly frank with you guys regarding the Canadian. I'm not sure what to do with it at this moment. I look at it and I'm like, I don't know what to do, because going into the end of last week, it looked like we were going to, you know, we rejected this big multi-year trend line here. You can see that big multi-year trend line. We rejected it, and I'm like, oh, I think I want to be short. Then the tariff news came out about Mexico. Then, you know, then the dollar Canadian rallied up past resistance, and then we're just kind of slumping again. But you would think that, you know, if the new USMCA deal is maybe going to find some wow, look at the euro, is just spiking to new highs. This euro looks very bullish, guys. I'm not long right at the moment, but I really want to be long. It's just, you know, we're knocking our head up against some resistance here. But what I'm trying to explain to you guys about the dollar Canadian is maybe the dollar Canadian is feeling more the weight of the dollar versus, you know, the risks of further tariffs or whatnot. But yeah, like I said, you have to be very selective on where you're buying the dollar. You can see the dollar yen, even though the dollar is weaker against most, you know, the dollar yen's kind of holding up a little bit because equities are, frankly, they haven't fallen apart completely. You can see the S&Ps, you know, we're down a little bit, but we're finding support ahead of that 38% retracement, which we did reference this level here on the week ahead video. So we know that that's pretty important support. So so anyway, just a quick overview of you know, how I see the markets. I again, you have to be careful with the dollar. The dollar does look vulnerable. The dollar index, by the way, we're on wedge support right now. So I think if we start cracking below this 97, you know, 97.50 level, we get below these lows here. You know, we're going to be at risk of kind of coming under some pressure. But what I'd like to do is I would like to take a couple of minutes to see if Steve wanted to talk about anything regarding Zoom that maybe needs to be mentioned. So Steve, are you here?
Oh yeah, I'm absolutely here. By the way,
Okay.
let me say that ForexAnalytix members will be able to join, you know, FACE as well as the European crossover webinar using the widget on their screens starting tomorrow.
A widget. Okay, explain to me what a widget is.
It's the little, in this case, it's the little, if you go.
Don't talk about my little widget. What? What's? Joking. Sorry, I had to throw a joke. It's such a serious topic that I had to throw a joke in there. Okay, so what? You know, explain to us your widget.
Go to the ForexAnalytix page for members.
Okay. The ForexAnalytix page?
Yeah.
Okay.
Yeah, there on the top, which says webinar on air.
Got
join
it.
FACE. No, right hand side.
Right there.
There. Yeah.
You know what? I've got my little drawing tool in the way. So let me right here.
Yeah. So tomorrow they will also be able to join from that. Otherwise, they can just use the email they will be receiving 1 hour before it starts. Every day it has the link and they can join through that. So more or less the same situation with what was happening with GoToWebinar. Just what GoToWebinar didn't have the technology that allowed us to, add that to a widget. In this case, we can add it. We've already done so for the European crossover webinar, and as I said, starting tomorrow, it's also going to work for Face.
Great. So this is the widget, in case you guys didn't know what the widget was. So starting tomorrow, if you're logged in to ForexAnalytix and you just want to just quickly join the webinar that's on air, because you can see the on air here. If you want to join it, you just click that little widget starting tomorrow. Great. What else did you want to mention for today, Steve?
Nothing else for our viewers and listeners. I think that everything else is, more or less self-explanatory. I mean, I think it's a very reliable tool, and they shouldn't have any issues.
Great. And I hope everybody's found the Q&A panel. There is a Q&A panel. I know we had Olivier was in the chat room wondering where the hell it was, but you guys should be able to see that now. Now the question that I have is, let me go and see how I pass. Can you see all this? No,
of course we can't. We cannot see any of that.
Okay, so what I'm going to do is I'm going to see if I can pass the screen to, I can't pass the screen. I think you have to take it from me, Steve.
Don't worry about it. I've already done so.
Okay.
There it is.
Oh,
now,
look at that.
I'm now sharing.
Okay, great. Pretty easy. All right, guys. Well, hey, I just want to say welcome to Zoom. And for those of you that are new to ForexAnalytix, welcome to ForexAnalytix. You have to excuse us a little bit today because this is our first day as a team using this. Paul Franco has been using Zoom for the last 2 weeks or 2 weeks. But for us as a team, we're also still getting our feet wet with the product. So I hope you guys enjoy it. I hope you guys enjoy the upgrade. I think it's a very big upgrade for all of us, and let's hope that our interviewees that we're bringing in get it easily as well.
Blake, just wanted to mention, I know that you're monitoring closely the Euro USD, but USD Swiss is also at a very, very, very critical juncture here, because we also have a larger ascending wedge, and at the same time, we have these wedges support confluencing more or less with a 78.6% fib of the last.
And I think that's something to realize that one of the reasons why the Swiss franc is stronger than the euro is right now is just because of the risk aversion, general risk aversion we're feeling. But maybe if we do see a breakdown in the Swissy, it'll lead us to that breakdown in the or breakout in the euro.
Yeah, and this is a critical confluence of support. So, if anybody likes it to the long side, this is the place they should be buying it. But obviously, if it breaks below here, it's going to be, in my opinion, very hard for it to not produce some follow through. So I think it's also worth, keeping an eye on it.
Good eye, Steve. So thank you very much. You guys have a great one and enjoy Zoom. Enjoy your new toy, everybody that's listening in at home.
Okay, Blake.
All right. Thanks, guys.
Thanks, Blake.
Hey, good morning, Stel.
Good morning. So,
we're very light on data today, correct?
Yes,
I mean, from this on. So, what do you have for us for what happened during the weekend earlier today?
Yes, well, okay, let's start with the data. It's this week is full of PMI readings. Today it's been manufacturing PMI, and as Blake mentioned, the UK numbers came in below 50, which disappointed. And this is a trend because you can see the Swiss PMI came in at 48.6. Germany, don't look at Germany, 44.3. It's really not a good reading. The Eurozone was at 47. There were only two positive surprises. One was China, which was barely above 50, and the other one was Norway, which continues to be good at 54.4. But anyway, the bottom line is that PMIs are not showing good readings at the moment, and that's a global phenomenon. Hold on a second.
It's Steve. Do you know if PMI is post?
Purchasing Managers Index.
Post-mortem indicator.
I was going to say postmenopausal irrationality.
Yeah, sounds like
Oh
it.
gosh, ladies, are you mad at me now? Come on.
That sounds so politically correct to you.
Men go through I'm going through menopause right now. Hold on. See, I just paused. All right.
Yeah.
Anyway,
So
I couldn't hold it back, man. I'm out of control. All right.
So that's been happening now. The other interesting thing is that we are starting to see banks such as Morgan Stanley and Nordea, I think as well, saying that there's a very high chance that there's going to be a recession in the US within the next year. And all I have to say to them is, you guys are late. Steve has been saying this for 6 months now.
Yeah, I'm available to be hired. You can just, I can give you a special price to just hear on our daily webinar.
Yeah, so that's something that's coming onto the radar. And if you look at we talked about this on Friday, if you look at Fed Fund futures, we're not quite, but almost pricing 3 25 basis point cuts by the end of next year. And the 10-year US is now, 30 basis points below, or 20 basis points, 25 basis points below the overnight rate. So that's all pointing to a, let's
trouble.
Yeah, trouble. I was looking for the word.
Yeah.
And I said it before, do I think they can cut 3 times by the end of next year? I think they either don't cut at all or they cut more than 3 times. So it's I think it's
binary, more or less.
Yeah, it's a binary movement.
Right. I agree with what you're saying. On the other hand, as I told you the other day, this is the 10-year yield, by the way. As you see, it's still drilling for oil. I mean, it's it's trying to make it to 2% once again. Still, you don't forget that if things get tough, there is a high chance that they can actually start cutting 50 basis points or even go, directly to 0%. I mean, there are no rules for that. Theoretically speaking, they can do, whatever they want.
Yes. And that's scary.
But by the way, Ziggy, probably we got misunderstood. Ziggy asked if there will be a different link every day. No, there isn't a different link. So the link you receive today on your email is going to remain the same, for you specifically. So if you want to somehow bookmark that, you can go ahead and do it. Or you can just every single day start it from, the email you receive, the reminder email. But no, the link is not going to be changing every day for you, Ziggy. From this point on, that's going to be your link.
Yes. And
anything else?
Yes, we have Donald Trump in the UK.
Chinese, did you mention the Chinese?
Yes. Chinese manufacturing PMI came in slightly better than expected. Donald Trump is in the UK, and don't look at Deutsche Bank because they're hitting new all-time lows. And I've said this in the chat room for the past weeks. I think the Deutsche Bank chart looks like death. I mean, if
it looks like Lehman, actually.
If you look at the monthly chart, I mean, it's the scariest thing I've seen in a long time. But
it is. It is. And imagine, theoretically speaking, we are still in the expansionary phase of a very, very, very prolonged business cycle. Imagine what's going to happen when we actually officially go into a recession, and especially if it ends up being, a tough one. I really don't even want to imagine what's going to happen with Deutsche Bank's stock. I mean, I really can't imagine.
Yeah, and interestingly, the euro is not affected yet. I mean, this theoretically is not good news for for Germany, for the euro in general, and still, it doesn't care at the moment. I think eventually it will, but at the moment.
Yeah, I think everybody is now, familiar with the situation with Deutsche Bank, and everybody believes, which, to be honest, I'm among them. Everybody believes that one way or another they're not going to let Deutsche Bank fail. And to be honest, I also believe that there is no chance that they're going to let it fail, because if they do, more or less, that's going to be, the beginning of a huge financial crisis for users and most likely globally, right? Yeah. I don't think there's going to be a remedy to such a situation.
Yeah. Yes, and that sums it up pretty much. don't have that much more to say. It's been pretty quiet.
Okay.
And yes, so you can
If you
take it from
remember
here if you
anything
want.
else,
I will.
you can always jump in.
Yes. Okay.
Okay, Stel.
Thanks.
Okay, so we have some developments we need to talk about. I'm talking about now technical developments in the markets. I think that we are at an interesting juncture. I actually finally got rid of my short S&P position. I made almost 1.5% to the remaining 2/3 of my position, which is quite a benefit, given that it was quite a lot out of the money. Do I think that this is the end of this move lower? No, I have no reason to think that. But I've had a good year with my 3 crude trades and my Ethereum and the rest. So now that I could manage, I managed to escape having a loss in this trade. In combination, of course, with the fact that I think that today the lows of the day so far have been on an important technical level. You can see it here. We drew that on Friday. A quality level, ABC. Does this mean that this is an ABC? No. It can be a much, much deeper correction, and that can be the very beginning of it. But one thing is for sure, 2720 is the bottom of this ascending wedge, and we know that ascending wedges tend to retrace to the bottom. So more or less, we almost made it there. We definitely made it to a possible ABC target. So what I'm trying to say here is that I expect that 2720 to 2730 is strong support area, and I would ideally want to see a rebound from here. The 200 DMA might act as resistance from this point on. So I might rejoin to the short side at 2770, but so far, I wrote it in the chat room earlier, I actually bought, I closed my short position and I bought for a short-term trade for a rebound a little bit higher. So that doesn't mean that it's going to happen. I have a very, very tight stop loss below the lows. But I think it's worth a shot. Now, I also have a question for the Nasdaq. So here is the Nasdaq. The Nasdaq is also depreciating within a descending channel. We actually today we're penetrating through the 200 daily moving average, and we're currently testing the 38.2. We've almost also made it here to the bottom of this ascending wedge. Not exactly. I mean, the bottom is somewhere at 69.90. We're a little bit higher. But as you understand, the Nasdaq is also coming close to some technical support. And in combination with the fact that I'm seeing an effort here to prop crude, as you see, crude at the lows of the day actually made it to 52. It's now almost $2.50 higher. I think they're trying to prop stocks here, and they might succeed to do so in the short term.
Steve, can I Deutsche Bank?
Yeah, we're still seeing the Deutsche Bank chart. Can you check?
Really?
Yeah,
check your screen. Yeah.
That's actually quite interesting. Okay.
So do what you told me to do. Stop and reshare.
Yeah, I'm gonna do that. And let's see.
Steve, I gave you all this time to master Zoom.
Okay.
I just can't.
Okay, now we can see oil.
Yeah, now,
okay.
Steve.
Okay. Okay, that is actually weird because it's not that I changed anything.
Isn't it weird?
Yeah, it is actually. We need to check that out.
Okay.
So let me see if I change. Okay, now you can see crude, correct?
Yeah.
And can you now see USD CAD?
Yeah, it's working now. It freezes at that one thing on the handover. I think you have to restart after a handover, is my guess.
That is interesting. Okay, we'll monitor it and see how it works.
Stelio said that you changed the settings, or someone did.
So
probably me.
So here is the S&P I was showing before, since you couldn't see it. Here is the equality target I was talking about, 2730. Here's the 38.2, so I can go over, a few charts we talked about. Here's the Nasdaq. As you can see, the 200 DMA, we're just pushing through it, but we're exactly on 38.2. As you see, here is the support area I was talking about, which is actually a full retracement of this ascending wedge. Wedges, in my opinion and from my experience, are some of the most reliable patterns. I mean, when you see after an extended move a formation like this, and you finally breach through it, then it's a very, very high probability that you're actually going to get, this kind of a trade. If it's a descending wedge, you're going to see a full retracement to the upside. If it is an ascending wedge, then to the downside. Speaking of wedges, and I know that Blake briefly mentioned it, here is another wedge you have to keep in mind. This is the Kiwi. Okay, so you can definitely interpret the last move lower in the Kiwi also as a descending wedge. And as you see, we broke above it. We then retraced somewhat. Actually, we retraced quite a big part of it. It was looking like this is going to fail. But on Friday, we turned higher again. And as it seems today, we're actually creating some follow through. So it looks to me like another push higher or an acceleration actually higher towards the 67 cent area, previous support resistance. Also, the 200 daily moving average is there. Doesn't look unlikely at all. The divergence of the daily RSI was also a tell here. So, Kiwi also not a bad trade, especially if you consider that we still have a very, very appealing risk-reward opportunity there. Now, speaking about indices, because, I briefly interrupted, here is the DAX, and the reason I wanted to show it is, yes, we did break below this ascending channel. We did break below this horizontal support area at 11,800. But so far today, we're finding support at the confluence of the 38.2 and the 200 EMA. So I would keep a very, very close eye to this area. The fact that we're already seeing some kind of a reaction from here seems like a confirmation that it is an area of importance. Now, that doesn't mean that, I would be just, outright buying everything. That means that the fact that I'm seeing so many assets, that are risk correlated on support at the same time, as I also see, as I said before, crude bouncing quite strongly, makes me a little bit hesitant in being in the short side in the short term, for risk assets. So nothing more, nothing less than that. We need to see more price action to confirm. One more thing, I said it last week, at the end of last week, but I just want to reiterate it today. Not everybody was here on Friday. Keep in mind that Friday was the last day of the week and also the last day of the month. And, we know from experience that, a beginning of a week, especially a beginning of a month, more importantly, the beginning of a quarter, and even more importantly, the beginning of the year, in this case, we just have a new week and a new month, can actually bring a new direction to some of the financial markets. So I'm paying a little bit more attention to any kind of shift, any kind of a big reversal that, we might experience within, the next couple of days. Now, speaking of the USD CAD, which I mentioned before, USD CAD once again failed to close on a daily closing basis above this 135 little area here. This is a little bit worrying. I was expecting perhaps another push towards 136.60. It's still not unlikely, not at all. I mean, it's not that we've actually, posted some kind of a big reversal, or we don't have any very strong signal that the USD CAD has stopped here. But I would start being very, very careful being on the long side. Now, if it continues higher, as I said, I think that 136.60 is a key area, and I would find it quite appealing to actually sell up there if we get the chance. Now, very correlated, USD NOK. USD NOK still consolidating. It has spent already a huge amount of time. I mean, since November, we've been oscillating between 840 and 880, 882. But recently, we've actually, reduced this range quite a lot because we've been oscillating between the resistance I mentioned, 880 and 882, and 860. So, the inability to break higher is starting to get worrying as well. Now, it doesn't mean that we can't still break higher. We definitely can, and we should respect the uptrend as long as this purple ascending channel is holding. But one thing is for sure, if we start seeing, some momentum to the downside, and especially if we take out 860, I would start getting very, very, very worried being long, because I think, that this can prove to be a big head fake with this, break above this multi-year corrective pattern. So, I remain a little bit skeptical. Now, if we break above 880, fine. We just needed more time to consolidate. But as I said, if we actually fail, that's going to be a very, very bad sign for the bulls here. Now, having to do with bonds. If you remember, Coach, I don't know if you're actually here. If you remember, we were talking about how much bonds have moved to the upside and how much sentiment is one-sided. And if you remember, I explicitly said, yeah, it's one-sided, but I really have no sign that something is changing, and we can actually get even more bullish from the sentiment side. And indeed, bonds have resumed to the upside. I just wanted to mention here that the bonds are approaching the 161.8% extension of this last corrective move. Even if they extend higher from here, then we have a rectangle target at 170.20. Keep in mind that we're now at all-time highs, and that is something to really consider. At the same time, the treasuries have accelerated higher. They've already accomplished this objective, the extension of this range at 127.10. I'm also paying close attention to this ascending channel. We got quite close to its resistance, and also keep in mind that we had a very important high almost at 128. So bottom line, bonds are approaching resistance, and that is another factor that I took into account in thinking that some kind of a respite, some kind of a, at least, even a temporary risk-on window might be probable for the next few days. I don't know if you have something to add here, Coach.
No, 3 drive, you're getting a confirmed high on your daily time frame. Some of the shorter time frames are beginning to not confirm, but the readings are still low. So, I'm looking to take advantage of this by buying TBT or shorting TLT, buying TLT puts. And I was looking for about 133 and change in TLT, and we're not open yet. But yeah, I know it's early, but sometimes you want to be a little early and start building a position. So I'm not against having a little piece on for a bond top if you're not leveraged and you just buy a proxy like TBT. So I think, and I think the top will be coincidental with some type of low in the yen, and I don't think we're there yet, but perhaps the bonds lead it before the yen turns. So I certainly wouldn't be long bonds up here. And, Steve, sometimes like you with S&P, we all like to hear the ice crack.
Oh, yeah, I totally understand what you mean.
Yeah. So, I mean, just having a little piece on, I don't know if it does it for you. It helps me pay attention to it.
Yep, I totally know what you mean. Many times I go into a position, lightly to begin with, just to see, just to test, the waters, as you said, and then, if I see it
then you're watching it, and then you start to notice things, and for possible add-ons, etc.
Absolutely,
Yeah.
I totally agree. Also,
that's my
another
take
thing
on
I wanted to mention here is the DXY. DXY still riding in the short term this 50 daily moving average, still riding this purple ascending trend line that actually defines the uptrend since the beginning of 2018. So I wouldn't be jumping the gun here, but as I've said before, if we actually break through 97, then, you know, several technical events, one after the other, you know, we have one technical event after we break 97. We now have a lower low after a long time. Then if we break from, you know, we also break this ascending trend line. Then if we break below 96.30, we've also broken this blue ascending channel, and you get it. I mean, one after the other, you get even more confirmation, more levels breaking that give you confirmation that something is changing, that the downside is opening. So I would be then very, very careful being long the dollar. I would actually love to accumulate, you know, short positions, buying some currencies against the dollar. But you need to be careful because we are not there yet, right? I mean, it needs a little bit more patience. As I said, 97 is the first area to watch. We're not far away from that. I'd rather wait for that to break down. I think that if that happens, you will still have a lot more downside. There's no need to jump the gun, okay? Because on the other hand, if you see a break above 98.30, I think that we're going to accelerate higher, and the next target is going to be at 99. Now, USD yen, another thing that, you know, makes me want to look for a possible rebound here in the short term is that the USD yen is currently on confluence of supports. I wrote that at the end of week analysis, that we actually closed right on this multi-year, you can see it if I zoom out, on this multi-year symmetrical triangle support. At the same time, this is also the 50% fib of the spike low to this high. So, you know, USD yen very, very close to breaking down, but on the other hand, at a very good area from a risk reward perspective if you're looking for a rebound, because you're going to know if you're wrong. In my opinion, a move below 107.60, this close, the spike days close, low, is definitely going to, you know, create a major technical event, the breakdown from this triangle, in which case I would expect an acceleration lower. So in essence, you know, the stop loss to an attempt to be long here is something like 60, 65 pips, which is, you know, a very appealing risk. If you consider that at the very least, if you see a rebound here, a retest of this 109.70 area is very likely to be hit, which is 140 pips away. So basically, roughly a 2-to-1 risk-reward ratio for a rebound from here. Otherwise, if you're wrong, you can just, you know, sell the breakdown. I think that if, as I said, if we break down from this 61.8 and this low here, things are going to be very, very, very tricky for the bulls in this market. Let's see, questions. Don't worry, Dale has a memory like an elephant and a widget that resembles a trunk. What do you think about Aussie CAD? Aussie CAD, yeah, let's have a look at it. Aussie CAD, quite a nice rebound from here. But, you know, just look at it. It looks to me like a big triangle or whatever. So bottom line, I wouldn't be doing anything with it. If you want to sell it, I can tell you that we're approaching the confluence of the 61.8 of this last move lower and the 200 DMA. So, you know, probably good area to try to sell it. But personally, from what I see, if I zoom out, because, you know, I always try to do a top-down analysis, you know, look at the longer-term picture and then see if something is appealing in, you know, shorter-term time frames as well. You know, just by looking at this, I wouldn't be doing anything with it. Just my personal point of view. It seems to be rebounding, you know, with quite a momentum so far, but that doesn't, you know, doesn't necessarily mean much. Okay. Steve, so the one I last tweeted out today is good for everyone who registered. Yes, Ziggy, that's the case. Yeah, I just see your comments that my screen wasn't moving. Thank you. I think it's now working correctly. Olivier, can you please send me the chart you want me to look at on Skype? Because I have a little bit of an issue. I don't know how to actually pick it up from here because it's not, I cannot copy it from here. So I need to see how I can bypass that testing later. So if you want to send it to me on Skype, I will gladly show it. Okay, nice. So let's go on some of the crosses. Euros. I'm monitoring this channel. That doesn't mean it's going to hold. It actually looks quite heavy to me. The fact that we've been unable to actually find a decent rebound the last 3 days is a little bit worrying to me. So it looks like this break above this 161.20 area might have been a false one. So I wouldn't be surprised to see a deeper pullback in the Euro-Aussie. But anyhow, as long as this trend line is holding, I would be a little bit careful. But keep in mind that at the same time, Blake showed that Euro-Kiwi has broken below this ascending channel. And if you look at it on a 4-hour chart, let's pull it up here. This looks like a decently formed head and shoulders formation, right? You can see it here. So I would be quite careful with this pairs at the moment. And if we also visit the equivalent pound pairs, so pound Aussie, you can see that first of all, pound Aussie got rejected from this very important trend line once again. A few weeks back, I had actually mentioned that on the webinar, and we drew these two possible outcomes when we were there. That, one possibility, we get rejected once again, in which case we push lower. Second possibility, we break higher, in which case we accelerate with the upside. So, the rejection scenario, is the one that we got. And I would start being even more careful here because we're currently testing this low. So we're in all actuality threatening with a lower low after a long time. And we're breaking through the 200 DMA as I'm speaking. So a move below 181 is going to be quite a bad signal if you want to be long. Another bad signal here is the fact that we're entering on the daily chart oversold territory, which many might interpret as an indication that some mean reversion is due. So you might see a short-term bounce, which can easily be the case, but usually, oversold or overbought reading is an indication that this is the direction of the trend. So I would be very, very careful here with the pound Aussie. Having said that, 181, quite a strong area of support. So if for some reason you like it to the upside, this is the place you want to be buying it. And at the same time, as you see, also pound Kiwi breaking below today. It closed on Friday right on the confluence of the 38.2 and the 200 DMA, but today it seems to be breaking below it. Also taking into consideration the false break we had, the overthrow we had from this ascending wedge, it would make me be even more careful. I think that pound Kiwi can easily accelerate lower to retrace this confluence of supports roughly at 185, 185.50. Coach, I hear you breathing on the microphone, which means that I have to check the watch, which says that Amelia is with us.
Yes, she is. Yeah.
Okay, perfect. So looking forward to hearing her voice again.
Okay. Now that you guys have met, I'm now going to promote you, Amelia. Gosh, you got a promotion today as a panelist. So that's not what I wanted to do. More. You're now promoted, Amelia. Welcome back to Face in our Zoom room. Waiting to hear you. Thank you for ringing the doorbell.
Yep, I can see her. She's
Can you hear me?
Can hear
yes.
you. Yes,
Awesome.
Amelia.
Okay,
Uh,
hi.
Welcome back, Amelia, to our
Hey.
new room in Zoom.
That's exciting. Thanks for the invite. I appreciate being here very much.
You're here
Exciting
for the
time,
yeah,
as
you're here for the christening of the room. So
I know.
do you want to share your screen? Anything that you want to while we're talking about currency?
Yeah,
anything you want to show?
sure. I can go between. How do I share my? Oh, right here. Sure.
Yeah, and then
It will let you choose
highlight
which one you want to share. Yeah.
which one you want to show.
That's. I don't know. This one is share screen. Let's see.
There we go.
I'm gonna take this away. Okay, here's the. I want to.
All right, we got it.
We can see your Bloomberg.
Good. Okay.
All right, beautiful. Amelia, I want to give you credit for excellent forecast. The last time you were on, you talked about if you were at a bank and you weren't short for these big declines in cable and euro, you lose your job, and you were maintaining a core short position in both of them, and direction has been your way. So nice call.
Thanks. It's not always easy. It was a little choppy, but yeah, my views haven't changed so much since last time. But I just recently spoke at a couple of trader conferences, and some questions came up. There are individual investor kind of retail conferences. I wanted to just talk briefly about that, and then
Sure.
we'll look at some charts and some.
Yeah, I was curious as to when we talked, I don't know how many months ago it was, the trade war was just a distant possibility, and now we're in the middle of one. And if that's going to change flows, FX flows, at least for a while. So why don't you go ahead and fill us in with what you've been telling everyone else first?
Yes. So, in global macro, we tend to watch, we're kind of like the doomsday preppers of the trading world, the global macro traders. And so we tend to think, what huge things can go wrong across the world or go right. But mostly when, central banks or, governments make policy errors, they usually don't make them to the upside. They usually, unfortunately, make them to the downside. So we've been watching macro themes, and here's a quote I put up. It was interesting. Money Show actually used it. That macro themes tend to simmer in the background, and they cause volatility when they move to the front. And then, those themes that come into play, they can cause big directional moves in the very short term. And so that's been interesting, what you said about, basically the trade war. And that was, this circle here is May 6th, when that was a market open when President Trump had that tweet heard around the world on China tariffs over that weekend, May 5th. And so you see the spike in the VIX here is what we're showing. And it's come down a little bit below 20, but it's still, pretty elevated. And
yeah, the market kept making new highs, Amelia, and VIX kept making higher lows. Kind of a tell to you?
Yeah. It's been interesting, and you want to look for, when the VIX, it's a little bit, we'll take a look at like sterling vol in a little while, but when it gets too low, there's only one way it's going to go back up. So, it's important to monitor it from both sides. And so we had the April 30th high in the S&P 500. This is the S&P and the VIX we're looking at. And then you just see the markers for the equity reaction to the China tariffs and then the Mexico tariff announcement, which was really cool because if you're trading, I was in the gym that evening when I set my alerts, obviously, for market news, and my alerts started in, about 5 or 6 o'clock. I forget the time exactly, but Eastern Standard Time, and, about the trade tariffs. So I knew immediately, go look at dollar max. And then I knew immediately, on the open the next morning, which you had plenty of time to prepare for because the market had already been closed when you sent this tweet. Equities are going to be lower just because for the past year, anytime there's a trade announcement.
The S&Ps were down about 14 handles after that announcement. In the aftermarket. Which
means you want to look also at dollar yen, moving lower yen strength. So it's good to kind of have these leading indicators. I mean, all in all, everything that's been going on has been showing the safe haven bid that the US dollar has, because here's the US 10-year and 2-year yields in the yellow and orange. Just look at that, really plunging the last week. And the dollar, for the most part, well, the dollar is staying strong, the dollar index, but it came off a little bit the last week, but still
So
You know
you
how
view this
it's holding up.
pullback in the dollar from last week as just another break to buy? And is it possible
I do,
that
yeah.
yields are getting to a point where they're so extreme that, like you say about vol, there's only one way they can go, that perhaps what we're seeing in the 10 and 30 year could be exhausting itself here?
I think that yields have kind of overshot themselves, but U.S. yields. But in a way, you know, traders are still kind of pushing or angling for a definite Fed rate cut this year. And I know that, you know, one is priced, but I think they want to hear confirmation from the Fed, and they obviously have not heard that yet.
Well,
And
that's
so,
because the S&P isn't 2,200 yet.
yeah. So we'll
Don't
see.
you think
But,
the Fed is more S&P dependent than data dependent?
I don't think so. But what
Okay.
I do think though is that they are very concerned about the trade war weighing on growth in corporate earnings, and so that obviously impacts equity.
Okay.
So I would look at it that way.
Okay.
Um,
I'm just more jaded than you.
it's true. I used to work at the Fed. I should make that clear. I used to
Oh,
work
that's right.
at the
Yes.
Federal Reserve Board, so I'm always like on the Fed side a little bit.
All
That's
right.
my bias.
All right. Well, you solve a mystery that some people still believe in, Amelia. Is there really a plunge protection team?
No, I mean they do their. I like the Fed.
Oh, you don't want to tell us.
I won't tell you. No, but
You'd have to kill us if you told us.
it's a secret. I do think that, but the fun thing about Jerome Powell is that, you know, now that we've moved obviously this year to one press conference after every meeting, you know, he's obviously had difficulty in communicating with the market in kind of a consistent way. And so that introduces volatility over all of the, you know, press conferences, almost like the ECB press conference, which is like a roller coaster. Of Mario Draghi and his little comments. So, you know, that's coming this week also. But anytime there's a Fed press conference, you know, you can kind of expect volatility on the day. So,
You know, Amelia, let me ask you this too about the Fed.
Mhm.
I had this warmest feeling inside of me near the end of the year when Paul and Janet and Ben were sitting there holding hands and singing Kumbaya. Didn't you?
I know.
What
They
I
all
mean, what?
came out in defense against the administration on Powell resigning. So it's a good show of unity.
And that's when he said, you know, I think we're going to, you know, we're in a watch and wait phase too during that
Yeah, he
press
did.
conference, right? So,
Yeah, during that.
you know, I mean, you bring in the poster childs for QE to kind of relax the markets a bit. Don't you think that was part of it too, theater?
Yeah, I do. I mean, I think that they want to communicate. They've been under pressure and criticism clearly from a number of sources to communicate more effectively and more clearly to the markets in a way that, you know, more average Americans understand and understand the role of the Fed and what they're doing. And so I think when they really got the heavy criticism, which was coming around December with that rate hike that they did, you know, which a lot of people thought was a policy error, and so did the president. You know, I think that they needed to show some sort of unity and go out all hands on deck and try to explain themselves a little more clearly. But, you know, when there's many people talking, it's hard to keep the message consistent. And I think that that's also a risk.
Okay. I have a specific question on the Dixie here. Okay.
Okay.
So, you know, I believe the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So the feeling I get is that you're still constructive the dollar.
Yeah,
I look at this chart. What price level would change your mind?
Well, for me, in terms of trading, remember when you're trading the DXY, I used to get this question all the time from clients. And when you're trading the DXY, 60% of the DXY is euro. And we have a giant euro event this week, namely the ECB meeting. And so it's most likely going to move. The ECB meeting and Draghi's comments will most likely move euro lower.
Okay. Why?
Yeah. Well, they already slashed their growth forecasts a lot the last meeting. Let me just pull up euro. And I think that, you know, a lot of traders have just wanted euro to move lower, but they haven't really made a push, you know, a sustained push for euro lower. So we're kind of like trading here in this like 112.17. That was like a flash crash here, you know, like 111.18 range. Right. And I definitely am looking for that to move lower this week on Thursday with the ECB press conference. Because as I said, Draghi is those press conferences are long. He says a lot of things. He answers questions quite bluntly from reporters. And, you know, he still maintained as of last meeting that they could hike rates at the end of this year. And so the market's really looking for him to not say that, to take that kind of forecast away.
Do you think that
so I think the SY will go higher this week.
Okay. Do you think the S&Ps would prefer, or, you know, our indexes prefer a weaker or a strong dollar now, because the dollar did kind of sell off with that last flush in S&Ps? So
yeah, the dollar has been, I think that was a little bit of an anomaly, and I think the dollar will continue to strengthen on the safe haven bid, because even if our economy slows, you know, I'm talking about now like 6 months out, and you know, the Fed has to cut rates, that doesn't signal anything good for the rest of the world. And also, there's so much uncertainty in the rest of the world. So we have uncertainty through the trade war here in the United States, but the rest of the world has Brexit. The rest of the world has the Italian budget fight. The rest of the world has inflation that's pretty much, you know, moving lower than our inflation, you know, moving lower faster than our inflation is moving lower. And so they're in a more critical situation. Our main risk here is trade war weighing on growth eventually, and just headline risk from an administration that likes to tweet and even has been very active on Twitter this morning, you know, for ahead of the London visit, which now the president's currently in London. Yep. You know, you're going to see a lot of headlines on that. I mean, we also have another massive deadline coming up for Brexit, which is Halloween Fright Night. I love the little.
When is that day? The 28th, 29th, or?
Now I'll show you. Well, let me show you some dates nearer term.
Okay. All right.
Just go through here.
Well, you're looking at housing. You cover everything, Amelia. You are.
I look at everything.
A specialist in everything.
So just nearer term, June 10th is the 5% tariff on Mexico. That starts that day. So yeah, typically, you know, that's not going to be a good day for the Mexican peso, say. It could also impact equities. And the June 28th to 29th, that's a G20 meeting, and Trump and Xi Jinping are expected, it's not confirmed yet, to talk about China trade at the G20 meeting. So expect a lot of headlines on those days, a lot of volatility.
So do you think President Trump will cave? Because I've seen almost Chinese national anthems for the trade war to stop buying Western goods. And I've interviewed a lot of people that have said that there is no way Xi will kowtow to President Trump.
Yeah, I think it's really tough. I think who does a really good job covering this is the Brookings Institute. Their research is free. They cover, you know, the minutia and the deadlines of the kind of trade war escalation and what could happen very well. I mean, there's no way of knowing, because I think that the president also doesn't cave. So,
yeah,
you know, we'll see. And I think a lot of the president's hand will be forced by, perhaps instead of being forced by China, will be forced by the U.S. equity market and how equities continue to react, because, you know,
great point.
Equities lower. So,
great point. Okay, so these are the two major dates. And when was that big Brexit date you were talking about? June?
Halloween.
Oh, in October next year?
Yeah, October. So the Brexit's been extended to October 31st. So we got all these awesome headlines like Brexit Fright Night and.
Oh, wow. Yeah.
Yeah. So Halloween will be trick or treat for traders. Which one will it be?
Are you going to wear an ex-Prime Minister May mask on Halloween this year?
I'm sure there will be a lot of those around trading floors. Trust me. This is going to be.
I mean, do you think the pound's going to wait for October 31st to finally take out 117? I mean, maybe that's going to be the bottom. Do you think that the majority of the sell-off will happen into the fall in cable? Or could we rally into it with hope?
No, I don't think there's any hope for Brexit anymore.
Okay.
I mean, it's just, I mean, it's just a really tough situation. It's driven entirely by headlines. But with the introduction now of, reintroduction, I should say, of Boris Johnson and him arguing kind of over the past week for a no-deal Brexit just to leave.
Right.
It's like absolutely nuts that option is like now back possibly on the table. And so
what a messy divorce.
Yeah, it's so messy. And here we're looking at sterling 6-month vol. This is around April 10th here.
Yeah.
It just collapses because on April 10th, that's when they push the Brexit deadline back to this October 31st date. So it's starting to climb, but sterling, let me show you 1-month vol really collapsed. And yeah, here we go.
I had an interesting guy on.
See the collapse in sterling 1-month vol on April 10th.
Yeah.
So it's so low that, kind of like we were talking before, there's only one way for it to go up. So.
Yeah. Let me ask you, with the euro heading towards parity, cable heading towards parity, is any of this being engineered for any reason? For them to be parity with the dollar on any kind of, are you expecting any kind of currency reset in the next several years? What do you think's going on here? Is it just a coincidence that they're both heading towards parity with the dollar?
Yeah, I mean, I think it's tough to say because, on a 3-year horizon for both Europe and, well, certainly the UK, so much, especially the UK, so much could happen that we're just not sure of. But, yeah, I mean, parity with the dollar is always, the dollar is the world's, reserve currency. So I think that's why people talk about other currencies in relation that are stronger than the dollar back in relation to parity with it. But it's really tough. I mean, you see here, this was moving up in the headlines earlier today, but here on Bloomberg, Deutsche Unicredit, they're moving the swaps from London, anticipating a Brexit. So, trading is leaving London, euro clearing is leaving London in the currency world. So that's not good.
Yeah. Wow. Maybe we live in interesting times.
Exactly. I wanted to just talk to you. Tonight is the RBA meeting.
Okay.
And they're supposed to cut, it's a big deal. They're supposed to cut rates 25% tonight. It's overnight Eastern Standard Time. So it's like 12:30 a.m. Eastern Standard Time tonight.
Okay.
A couple weeks ago, Westpac Bank, which is an Australian bank, major Australian bank. I used to work there for like, just, all knowing sake here. They were the first to call for 3 rate cuts by the RBA. So they're calling for a June rate cut, an August rate cut, and a November rate cut. Wow. And bringing the cash rate down from 150 where it is now to 75 basis points. And that's obviously an aggressive call. That's a big deal. Everybody thinks the RBA is going to hike. It's going to cut tonight 25 basis points. But, when it is the first cut, it tends to impact the currency. And the reason why I'm bringing this up is just because, Aussie been kind of holding up well. See the cash rate. It's tonight, 150, 125 is expected now. Economist survey 38, so almost everybody thinks they're going to cut. And then they have a press conference afterwards. So Aussie should be volatile tonight. Though the rate hike is expected and priced in, because it's the first rate cut, the rate cut.
Yeah.
It can kind of push the currency lower. And so it'll also matter what they say in the press conference tonight. And, Aussie's been kind of holding up pretty well the past week just because of, there's been a dichotomy in terms of equity prices in Aussie. Usually they follow equities lower, U.S. equities lower, but it really hasn't. It's kind of held up. And that's another reason why I think the DXY will be higher this week, because I think euro will be lower and I think Aussie will be lower this week with the rate cut.
Okay, you're showing housing prices here, and I look at it historically, and it looks like they peaked probably, a year after we did, before the Great Recession. Was it great for you? Anyway, up around that 15 up there, and a lot of areas in the U.S. have recovered to take out the highs from 08 in pricing. Maybe not the middle of the country, but Australia was like a failing rally, and we're testing crisis lows in Australia on housing
Yeah.
right now? Wow.
The employment is holding up well in Australia, so their jobs market's holding up well, but the house prices are just obviously collapsing.
Why?
Here. I'm not entirely sure, but I can get back to you on it. But it's just been a really tough. Also their housing market's quite different from ours. They go to auction and things like that. But it's just been a really tough housing. Yeah, I know. Now you want to go. Also,
they'll have to loosen their immigration standards maybe to bring in some buyers.
I wonder if it has to do with credit markets being tight there. I have to look.
Yeah,
but they also had a really recently low CPI readings were lower than expected.
Mm-hmm.
So, also, I just like to look at renminbi. This is China renminbi against Aussie. So here we have, that's the Aussie. Here's China renminbi inverted. So when it's moving lower, China is weakening against the dollar.
Right.
And you have that very important 7 level here,
right.
which we almost touched down in October, and we moved away from subsequently. But when renminbi weakens, it really pulls Aussie down with it, and that's just a factor of 30% of Australia's exports go to China. China's flowing, so it's hard to have a sustained rally in the Aussie dollar when China's weakening its currency. It really can't occur for.
Yeah. So remember when China said it won't weaponize the yuan? You're looking for them to weaponize it and take out 7, with conviction.
I think that they will, touch 7. I don't think that they'll take out 7 in one shot. I think that they'll kind of touch it. It'll be very disruptive to currency and Asian equities for them to just take 7 out. So I think that they'll actually touch it a couple times. Like they'll touch 7, come back up, touch 7, come back up, and maybe third time it'll break. But most currency analysts that I know personally, based in Asia, in Hong Kong or Singapore, they think that the PBOC is going to try to move down towards 7.
Okay, if my memory is correct, Amelia, you have a target in euro sub parity, right? Or weren't you talking about 90 cents, 95, something like that?
No, I was talking more just parity. I think it's going to be tough to. I think it's aggressive. It's tough to break parity, but remember they're slowing more than the U.S. They have a budget fight going on still with Italy. They're being impacted by, Brexit. They don't know. Certainly, they're not as impacted as the United Kingdom, but they still don't know what's going on there.
Does that commentary say that you would prefer being long euro pound on any pullbacks? We've had a very directional move to the upside. A lot of people were very bearish this pair under 86.5 and said it was breaking down, and here we are above 88, above 88. Is that the trade going into the strengthening dollar, long euro pound, because the pound will demonstrate more weakness during the dollar advance?
I think it's tough. I think you're playing 2 currencies I don't like against each other. I would not do anything with euro sterling this week, just because I think euro should be weaker than sterling this week at the ECB meeting Thursday.
Right.
I would just leave it alone through the ECB. I was kind of interested in your last panelist, like Aussie CAD and Aussie, or like Kiwi CAD, Aussie CAD.
That was Steve Bolge who met you at the Money Show.
Ah, good. Sorry, I came in late, so I didn't.
Okay. Anyway, he's requesting an 8x10 autograph photo of you.
No, I knew one of him. I agree with him that there wasn't much to do on Aussie CAD, and would leave it alone. But the interesting thing just to watch for is, Canada kind of has this like misplaced optimism on their economy right now, where Australia is obviously. I mean, everybody thinks they're going to cut rates tonight, so we'll see. But let me just go back. That didn't work. But I kind of think that that cross should kind of head lower, but it's a little early yet. It may head lower overnight with this, with this rate meeting. But we'll see. He was looking at the charts. I would just watch it tonight if you want to trade that. That's something to look for. this evening. You know, cleaner is kind of Aussie against the dollar. It's the more liquid currency, but within the dollar block, Canada clearly, within dollar block cross trading, Canada clearly has the advantage over Aussie and Kiwi right now. So it's kind of just watch those to turn around again, to reverse.
You're an outstanding guest, Amelia.
Thank
Really?
you. You're an outstanding host.
Oh, okay. Mutual admiration. You know, you really covered a lot of ground here. And I'm sure after people either heard you live here today or they see the video later, what's the best way for them to keep tabs on, you know, what's going on in your, you know, market tactician, creative thinking analysis that you provide? What's the best way for people to follow?
You can go to my website, www.marketcompass.
You want to show it?
Yeah, I want to show it. Hold on. Let me get it up. And we'll have new products launching soon. We're a little behind with the web development, but it's coming around. And yeah, so here's my website.
Yeah, Market Compass LLC.
And you can get the guide now. And what that will do is, if you sign up for that, it's going to give you my free content, but it's also going to put you on notice for my new webinar that I'm starting. It's going to start in July. It's going to be a global event risk webinar. So I'm going to give you important dates for the upcoming month that you want to watch out for kind of macro dislocation and things that can happen in the market.
All right.
And it's important for technical traders too. Yeah. I get this question a lot. They're like,
what are you going to do, it online or is it a live event somewhere?
It's a webinar. It'll be a live webinar, but it'll be recorded. So if you miss it, you'll be sent the replay.
Okay. And is it you or do you have other panelists?
No, it's only me for now. So
okay.
Yeah.
All right. Well, Amelia, thank you for initiating Zoom for us today. And it was a great interview and, you know, gave me some ideas and you still have your conviction about the dollar, and we'll see what the upcoming days come. Thanks for the heads up on all the different events that we're looking at.
It's an exciting week with the Trump in Britain and then the ECB and the RBA, and there's a lot of Fed speak this week, and there's employment on Friday, U.S. employment. So it's a big week.
I don't even think Rod Serling could have wrote a script like this that we have going on right here, Amelia, my trading warrior sister. Thank you for coming in and edifying our community once again, and I'm going to get you on the books and do it again later on, most likely sometime in the summer, okay?
Yes, well, thank you. Trade well, everybody. It was fun to be here today.
Thank you so much, everyone. You could follow Amelia on Twitter as well, at her name, at Amelia Bourdeau, Bourdeau.
That's right. And also, if you have Instagram, I do behind the scenes news updates during the day on my Instagram story. And the Instagram is just Market Compass is the Instagram.
All right. Thank you so much. Have a great day. Have a great week, Amelia. I hope pips rain down on you and everyone that hears your words, okay?
You too. Take care. Thanks, everybody. Bye.
See ya. Okay. Now, how do I end the webinar? I think Steve's doing it for me. End meeting. All right, everyone. Remember, don't just count your pips, count your blessings. Mr. Low Tech, Dale Pinkert, made it through our first Zoom experience. And I'm telling you, I didn't have any fingernails left over the weekend. I'm going, oh, Zoom, oh my goodness. Good hunting, everyone. See you for Turnaround Tuesday.